following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, a little bit of analysis, a little bit of education, a little bit of what's trading, a quick trip into the dark side of unusual activity, and we'll sprinkle all that maybe with a little bit of listener feedback and some around the block and perhaps some strategizing here or there. A lot of good stuff here on the old Option Block program. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. I know a lot of you already have checked out the Options News Rundown program, where we've added yet another new program to that lineup. It's from our friends over at the Options Industry Council. It is called The Wide World of Options. If you haven't had a chance to check it out, I heartily recommend that you do so. You can, of course, find it on our website or in iTunes or Stitcher or wherever your finer podcasts are purveyed. Just search for Wide World of Options. It's hosted by my friend Joe Burgoyne over there at the OIC, and as the name implies, it is a very broad look at everything options. Some interviews, some nostalgia look-backs, reviews of trading platforms, book reviews, all kinds of fun stuff going on over there. Check it out at the check it out at theoptionsinsider.com or wherever you find your podcasts of choice. And now it's time to dive into this show and introduce my cohorts, my boon companions, the usual suspects joining me on the old Option Block All-Star panel, starting off in order of distance, if not priority. He is beaming in from the great state of Maine, taking a break from all of his sumptuous lobster eating to join us on the program today. He is none other than the Rock Lobster himself, good old Andrew Giovinazzi from a little thing called OptionPit.com. Mr. Andrew, welcome back to the show, sir.
Thank you for having me on the show. Lobsters are at, I think, about $4.10 a pound right now. So that's at least what they're selling them down the street for. Right off the boat.
Not being a big lobster guy myself, is that a deal or is that extravagant?
Well, I bet you if you went to the Treasure Island in Chicago, they would be $29 a pound.
At least. Well, there you go. Sounds like you have an ARB headed your way. I think some Giovinazzi lobster trucks will be heading to Chicago sometime soon.
I know. Well, I think going out for our big event, I might bring some lobsters out there. Although we're eating at Gibson's, so the lobsters are already there, and I have to just roll my eyes and pay an exorbitant price for a succulent lobster tail, but I will still do it and eat them there quite happily.
Oh, I'm sure my steak will be on pre-order for me, and I'll be waiting for me when I show up at Gibson's. A nice steak and surf and turf on the Option Pit crew, and of course, all listeners of this show are invited as well for free steak and surf and turf at Gibson's on Mark and Andrew. How nice of you guys!
Yes, our big event, but that's the wrong part of the show. But things are good in Maine. No complaints.
All right, speaking of having no complaints, who can have a complaint with our next co-host? He is beaming in from the town known as St. Charles, Illinois. None other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always happy to be here. A lot happier to be here today than where I was on Monday in a dentist chair. Never a fun thing.
Yeah, I find dental work and then hosting a program tend not to go hand in hand. It doesn't sound too great afterwards.
Yeah, well, what I got to do next Monday morning is sounding even less great, but hopefully I'll be recovered in time to play with pain come Monday afternoon.
Yeah,
we are ready.
Go. If it's not painful, you're not living, right? That's
right.
The old football analogy, or somewhere in that space. And last but certainly not least, he's the closest in proximity as well as closest to all of our hearts. Of course, he is the Viceroy, beaming in from the land known as Options Express. You know him, you love him. He is Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark, good to be here today. A surprisingly quiet day on the phones up here, but we'll talk about that as the show goes on.
People are already getting bored with the endless rally. Is that what you're saying?
Yeah, they're becoming complacent again. You know, VIX at 16, this only moving 150, 160 points up every day. We haven't had this since May.
Yeah, it's been a long time.
Phones were quiet here today. Guys on the desk said something interesting. They said a lot of calls today, bottom fishing in the metals. So that's kind of interesting, and we'll expand on that in a bit.
That sounds like an interesting one for Uncle Mike to mull over a little bit. And, of course, the trading block.
The trading block.
All right, listeners, you know what those bells mean. They mean it is time for the trading block, where we dive into what was trading, what was moving the old markets today. And as we joked at the top of the show, was yet another in the endless series of rallies we've been having over the past few sessions, ever since that bit of a scare the market got, courtesy of Uncle Ben, kind of passed over. Now we've just been in rally mode, rallying yet again today. The S&P up 0.6 of a point, Dow and NASDAQ leading the charge, up 0.8 of a point. So a lot of rallies. VIX cash selling off to the downside about a third of a point or so, but not really as much as a lot of people might have guessed. I think people are kind of getting into the rally mode now, and they're kind of building that into their trading. Let's start there, perhaps, as we are wont to do. I think a lot of people expected, of course, with the rally continuing, vol to start coming out of the market yet again, but perhaps a little bit more aggressively than it has been over the past day or so. What's your take on all that, Andrew? Or is the balloon letting air out a little bit slower than you anticipated, given all the rally we've seen over the past couple of days?
I actually think the balloon is over. I think the air is coming out a little faster than I would like it to.
Oh, you think it's over squeezed, over deflated?
Well, I think part of that has to do, actually, I'm just writing that up as a blog today, but we're still moving kind of at around 1% a day, at least average true range minimum. The emerging markets, I would not call that a bounce. I think they've edged up a little bit. I mean, they're not going straight down anymore, and they're up slightly. And the vol has definitely come out of those markets hard. So, I mean, they were at pretty much a panic level last week. So, I think the vol coming out of that has been really, really severe. And, gold, I just think gold is a big liquidation trade. Every fund that was in there on inflation is just getting out, and it took a long time for them to get in, and it's taken a long time to get out. Treasuries and Treasury interest rates have the good thing about, the U.S. market is it's a global open market for interest rates. So when people wanted out, they got out. We drove rates basically from 1.75% to about 2.60 in 6 weeks. So the market's adjusted. They don't think rates need to really go up, from this level. So, to the extent that rates stabilize, probably the equity market stabilize a little bit. So I think vol will come down eventually. I think it's coming down awfully fast, considering, and I don't think we've really quite adjusted to the new what this new rate environment's going to be, especially for equity prices, and probably, what was a good part of that rally this year on that, with the rest of the world kind of being flatlined as far as growth goes. So I think the air has come out a little fast, mostly on the back of the panic coming out of the emerging market volatility and some treasury volatility the last probably 4 or 5 days.
So a rare dissenting opinion from Mr. Andrew, who thinks the balloon is being squeezed not too slowly but far too fast for his taste. He's a little uncomfortable now with all this air coming out of the market so quickly, if I could paraphrase for you, sir.
That's fair.
Taking some Tums,
paraphrase.
Can't sleep at night, tossing and turning, nightmares, the whole 9 yards, night terrors, screaming, sweats. Am I painting a vivid enough picture for you listeners? All right. And Alex, you mentioned earlier that the phones were a little bit quiet today, but you saw a little bit of action, a little bit of interest in the old metals land. Why don't you illuminate a little bit of that for our listeners here?
Yeah, I do a lean over the desk to the options guys, and today I was a bit late. I didn't do it until about 2:59, and I said, what was active today? And you always wait to hear Apple, Amazon, Netflix. They go, nah, today was metals. It was bottom fishing gold at 1200. There were a couple of silver conversations. There were a couple of interesting conversations too about new customers who had physical silver, who were talking about what their choices were for hedging, and could they deposit the silver and sell futures contracts against it. So a lot of what I heard today was a lot of the mechanics of people who were looking at the metals market. But the big trade on the desk, as I say, was bottom fishing in gold. People who thought 1200 was going to hold and were coming in and buying here. But the phones weren't that active today. The last 2 weeks or so, the phones tend to get active on the big turns in the market. And of course, the last 3 days we haven't had those turns. As Andrew pointed out, we've had, on a relative basis, pretty ordinary range of about 1% a day. 1% a day is a 16 volatility, so things look pretty in line. Dovish talk out of the Fed today, so it was a good day, but it was a quiet day.
We touched on it last week, I believe, on the show, but maybe it's a good subject for a future episode of this program, or perhaps our Options Bootcamp program, where we dive into some of these topics in a little bit more depth. But the whole notion of the logistics behind the futures and futures options side of the fence. Let's say you're the guy who inherited a bunch of silver coins from Grandma Irma, and now you have a bunch of physical you're sitting on. Like, what do you do with it? How do you deposit it? How do you hedge against that? All these kind of fun things that people encounter on a regular basis on the futures and futures options side. Not so much on the equity and equity options side, so we don't really talk about it here too often. But it is an interesting thing, and it's something people are encountering more often, or when they're getting into those options and those products for the first time, and they find out they end up taking delivery, and then now all of a sudden they have to pay for all those logistics that go into that and dealing with that side of the fence. There's a whole logistical arm to the future side of the fence that we just don't deal with here on the equity side of the fence. So maybe it might be something worth exploring for a future show. We're also going to be launching a futures options show down the road as well. Maybe we'll delve into that a little bit more there as well. So a lot of interest in the futures options land these days. It's just a lot of talk, a lot of interest in that stuff. Commodities, commodity options. So there's a lot of grist for the mill for us to explore. Speaking of exploring, go ahead, Alex.
I was going to say, one thing I think the options exchanges should take away from the interest in futures options is you don't have the fragmentation of markets in futures options. And, this again, I'm going to, light the ball of controversy here. But, for the 6 or 8 futures products that really trade tonnage, the interest rates, the gold, the E-mini, the light crude contract. The futures markets are doing a good job of bringing option products to the forefront, enhancing the technology. And, you look at the equity option market, which we've talked about a little bit, has not had the traditional growth it's had in the last year or two. And you look at the futures options market that at this point is growing exponentially and is attracting the e-commerce brokers, people like ourselves, and eventually through to the Schwab customer on the OX platform. And there's a lot of appetite. There's a lot of traction in those markets, especially the couple markets that aren't well served by ETFs. And the classic one there is energy, where the ETF just isn't a good proxy, isn't really a good surrogate, and interest rates where it's so easy to trade this stuff. It's so liquid that it clearly looks like futures options are on a trajectory for phenomenal growth over the next couple of years.
Yeah, it certainly seems to be the bright spot over there at OX these days. A lot of growth, a lot of interest. I know you guys have been developing that for years, ever since the Express Trade acquisition. So it's nice to see that people are coming along and the interest is really building in that, because it's an interesting product, and it's certainly a product category that could use the touch of a firm like OX and like Schwab to make it easier to access those products, to improve the tools, to improve the different strategies, spreads, and things you could trade on them. That area has been very impenetrable for a lot of retail. So if a firm like yours can come along and make it a little easier road to hoe for those customers, then I think that's a good thing for all involved. Speaking of futures and futures options, and of course the commodity land, as I am wont to do this part of the show, I like to turn my eye towards St. Charles, towards Uncle Mike, because I know, given all the action out in GLD these days, you've probably been quite busy and probably have a few things to say on the matter. First off, give our listeners a little bit of an update. What's going on? Are you rolling down some puts in GLD? What's the current Uncle Mike take on GLD?
Hands are in the air, basically, but this is how I'm playing it, with my hands in the air, and how I'm trying to achieve profitability while having my hands in the air. As I've said many times, I am still a very long-term bull on gold, and I still am a long-term bull on gold. I guess maybe I'm a glutton for punishment, who knows? But with that in mind, what do you do in the short term? I've always talked about being long-term bullish, short-term cautious. This is how we're playing it. Last week, what we got into was GLD was between around 124, and in lieu of doing a collar this month, what we did was I went out to August, and for every 100 shares, I didn't buy one, but I bought two August 119 puts. So with that in mind, that's obviously just a theta headache waiting to happen in my world. So what I did as a means of just at least neutralizing the theta somewhat over the course of a week was to sell another 119 weekly put. One of the advantages of these weeklies is that if something happens, you actually have multiple weeks with which you can roll to if you want to make an adjustment in one way, shape, or form. So as gone on thus far this week, when GLD got to the 119 level yesterday, I bought to close the 119 weekly, and by weekly I'm talking about the ones that expire tomorrow, and rolled it down to the 117s. And then today, GLD continued to go down, and I rolled it down to the 116s for tomorrow. So on it, we're actually at a stage right now to where I did the math earlier today, and I would imagine it was probably about an hour ago an hour before the close when I was doing the math on this before I did the roll to the 116s. I have it figured out to where we're probably, in terms of the actual dollar amounts that's in GLD, it's as if we are still at around the 123, 124 level. Different people got filled at different levels, so it might be a little bit more for some clients, might be a little bit less for other clients. So with that in mind, let's assume for a second that GLD expires at 116.01 tomorrow. Now, who knows what it's going to expire at, and I have a whole nother, and tomorrow's going to be probably a pretty busy day of staring at the screen for me, as it typically is in situations like this. But with that in mind, we'll actually have the ability to be negative delta on GLD, but yet still have the ability to have this be a long-term bullish position. Now from there, it's very likely tomorrow, if we get a little bit of a pop in GLD to the mid-116 level, we'll probably get out of tomorrow's 116 put and make an adjustment for something next week on continuing to sell premiums. That way we can at least get some type of theta mitigation along the way. But in the meantime, what I'm doing with this, I'm not in a huge hurry to close the additional August 119 GLD put. I just basically have to do stuff for the time being, and that's how I'm going to play it.
Nothing better than doing some stuff over the coming weeks. You make an interesting point, and it's something I've been mulling for a while, and I'm sure there's some data to back this up. I have to go dig through it and find it myself a little bit. But now, a year or so plus, with the real full-on advent of the weeklies, where they've really captured the public's consciousness and come on en masse, I'd say probably over the past year and a half or so, it'd be interesting to look back and see how much pin risk has increased over that period, because now we have weekly settlements, weekly expirations. It seems like every name I'm trading is pinning on an almost weekly basis. Have you guys been noticing that as well, Uncle Mike or Andrew?
Not really, no. I have to say. There was just a study on it. I don't remember where I was reading it. The Wall Street Journal, actually, the last week, about pin risk. I'll bet you if you search the journal, it did say, though, that the amount of stocks that were pinning actually statistically had jumped a little bit. And the guy that actually wrote the article seems like he knew something about options, because he said, well, that could be because of the activity of traders that are along the strike around expiration and a tendency for things to go that way because, they've got they keep scalping their gamma. So that at least made it sound a little more intelligent. But
well, that would be the thought process. We're getting the gamma explosion is now occurring every week versus once a month, so that tends to drive you toward the strike on a more regular basis. So you would think, just statistically, we would have to be pinning on a more regular basis. It is nice. I did just search for pin risk while we were talking, and we were the number 3 result on Options Insider. Nice to know our stuff's popping up in the conversation on a regular basis. I don't see the Wall Street Journal article, but I'll keep looking for it because it is an interesting study. I'm sure just by statistically alone, you have to really think that we'd be pinning on a more regular basis.
We are doing a little more, and it should happen that way. So I think you're right about that, Mark. But again, there I go again, plugging another website over.
How dare you, sir?
Insider Radio.
You just got your contrarian pants on today. Everything I'm saying, you're just saying the opposite. You're just being feisty.
I'm just going to be put in the penalty box.
You buy a call because you want the stock to go up. You want to take the other side of that one? No, of course not. It's foolish nonsense.
Well,
you're saying.
What? You put Zynga on there again just to hackle my.
I knew that would do it.
My hackles.
I knew that would do it. Twist the knife. Twist the knife. Speaking of twisting the knife, I know you've been playing around in a little bit of GLD and gold love yourself, but you play a little bit differently. You like to look at these broad indices, not because you're a coward, but because you like these broad exposure type things. So, no response to that. Okay, I'll just keep going.
Cowardice is a relative.
Yes,
thing.
That's true. That's true. So tell us about your new favorite here, your GDXJ.
I'm just saying. All I'm saying is this. Okay. In January, the GDXJ was 20, trading over 20. This is the junior miners, Market Vector's junior gold miners. In October of 2012, it was trading 40. Today, it traded 845. That is a pretty stunning destruction.
$8.45 for our listeners
value.
who may be confused.
That's all I'm saying there. Is this a short-term trade? I don't think so. I think the implied volatility is pretty darn high. You're looking at something like, okay, the GDXJ is trading here. Again, mind you, we've pretty much avoided the gold trade for a while. But you're looking at the August 7 puts for 20 cents. August 8 puts for 50 cents. You could go out to the November 6 puts for a quarter. Unless demand for gold literally goes to zero, I think you're starting to run out of some downside in this. My favorite time to sell puts is after a stock generally has gone to zero, because it can't go to zero anymore. Once you're at zero, it's hard to go zeroer. I know that's it's not a technical term, but I'm just looking at it. I don't see a whole lot of running out of downside risk here. Something like cash secured, you're buying this gold miners at levels that you haven't seen probably in 8 years. So I think there's a huge liquidity unwind. These funds are bailing, they're selling everything, and they're hitting every bit inside on the way down. Eventually they'll be done. just like they were in the emerging markets. I feel like that unwind is feeling like it's over. And I think gold's just the same way. And I don't know how long it's going to do this, but once some of the products get to near zero, it's hard to go below zero. And I think that's I would not say load back up the truck and make sure you have a pretty long time horizon, but a product or an ETF like this is starting to get pretty darn cheap.
So you like these AUG 8 puts for 50 cents. There's a pretty sizable 50-cent bid out there. You could essentially leg into the stock for $1 below where it is right now.
I know. I mean, that doesn't look too bad to me.
It's fairly attractive given
pretty much all-time high.
Yeah, given where the all-time low, at least for reasonable time. This thing was traded 827 recently, but that was a very recent phenomenon.
Yeah, that's just now. If you look at like a long-term history of the thing, it's like gold is never going to be pulled out of the ground for anything. I guess $1,000 maybe an ounce is sort of the line in the sand for a lot of gold miners. But we're trading. The product since the ETF was launched, we've never been at this level. Even looking at the GDX, which is I guess the other gold miner, since the lowest price. At the very, very bottom of the financial crisis, let's say even the GDX traded 1583. So, I feel like we are at kind of you're at a crisis level in the metal. So, I'm not saying I'm a gold bull like as much as Mike is, but if you're going to step in at some point, these products are getting cheap, really cheap. Volatility sky high. And if you don't have a position, I think you're in a good spot.
Yeah, if you're really bullish, you can do the AUG 810 risk reversal and still collect a quarter.
It's crazy, huh?
That's nuts. I don't know if you're really that gung-ho to take the upside on that, but if you are, if you're one of those guys.
It's not a trade I'm really liking the upside as a bet. It's mostly like, I'll start looking at maybe play around 7.5, something like that. Think again, maybe if you have to go to 6.5, who knows? But at that point, I don't see from even an intrinsic value point of view how much it can get too much lower than that. But
yeah, an interesting one. We'll definitely have to play around. I'll have to play around myself and see, dig into some of the fundamentals of what exactly goes into this ETF and who they're holding in their basket. But it's interesting. Interesting thought process there. Talk about idea hubs over at OX. That's our little idea hub here on the option block, listeners. But now we're going to keep on rolling. It's time to put on our fancy hats because it's time once again for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. I have my fancy fedora on. You've heard the somewhat dubious music. It means it's time once again for the odd block. This is, of course, the portion of the show where we peer into the seamy, shady underbelly of the options market. We're going to kick things off with, I think we might have talked about this one, but it's been a while. This is Statoil ASA, ticker symbol STO. Closed today at $20.80, up about 1% or so on the day. This is the name that does a whopping 550 contracts a day, so it's not really lighting up the old tape from an options perspective, unless you look at today when we saw a massive opening sale, massive at least in relative terms for the size of this name, a pretty massive opening sale here on the OCK 22 half calls. Paper came in and sold them for 40 cents 5,000 times in one massive block. Open interest, only 681 contracts. So clearly, this is opening paper. And clearly, well, I say clearly, but it seems to indicate at least this is the type of pattern we usually see with someone who is putting on a buy right. They got stock and they're writing calls against it. Maybe they're overwriting those calls. But this is usually the scenario we see unfolding here with a call overwriter. Mr. Andrew, would you concur, sir?
I would agree. I actually had my microphone and everything turned on properly that time. I was right there ready.
Ready to go.
You're sort of like your Tonto to the Lone Ranger right there. I was ready to go.
I like it. Does that mean I get silver bullets and a mask? That's kind of cool. Then I can keep control of the show much more easily.
See, that's where the show starts to go into the dark side right there. When you want to start talking, bringing that strange stuff into the mix, we're already in the odd block, and we get odder.
Hey, you never know when I need to slay a werewolf here on this show, so I need to be prepared at all times.
So I think this is definitely I think there's definitely writing. You notice kind of a theme. It feels like there was buyers of energy or energy stock buyers, probably, I would say, in the panic we had last week, getting a little lift over the last few days, and they are dumping calls against their positions. It makes perfect sense to me. And it's not a bad little yield, $20 stock, 40 cents per call. I mean, for an institutional or a pension fund looking for some yield, still better than a treasury.
And this gets back to what we were saying before, how you like to sell the puts when the underlying's at zero. This isn't at zero, but it's at a relatively low level. It traded 27 back in February, close course trading today a little bit over 20. So if you want to start blasting out some puts, there are worse times to do it.
Yeah, it's bottom of the 52-week range. Oil still trading, relatively high levels. Most of the crude oil in the U.S. is still stuck in the middle since we don't have any pipelines to get it out of there. I guess one day we'll vote on those pipelines to move the oil to where people actually need it until we're all a windmill state. But be that as it may, I still think, these are more opportune times for this type of stock and this kind of activity.
And, of course, for those of you listeners who are scratching your heads, I was, of course, speaking synthetically about blasting out some puts. So you can do that homework at home if you like to figure out what I'm talking about. Hopefully most of you are following along because you've been listening to this show long enough to know what we're talking about here at this point. But we're going to keep on rolling right on into our next name, Goodrich Petroleum Corp, ticker symbol GDP. Closed today down about 6 cents, so relatively unched on the day today. There's another one, doesn't really light up the tape. A little bit more active than STO, doing about 1,100 contracts a day. They did about 6,500 contracts today, and this one's interesting for a couple of reasons. Like Goodrich, like STO, we saw the paper going up here. On the call side, out of the money calls, to be precise, the AUG 15s trading for 40 to 45 cents about 6,000 times. So that's a pretty substantial amount of paper for this name on open interest of 26 contracts. So I think we can safely say that is opening paper. But what's interesting about this is a couple of reasons. If you did have a chance to attend our event last month, we talked a lot about how these flags, these little indicators you see in the time and sales data are somewhat dubious. And this is a good example of that. This trade went up buy right, but when you start digging into the trade, you start seeing the pop in implied volatility. That starts to set off a few alarm bells of people who've done this before to say, hey, maybe this indicator strip, this buy right, isn't perhaps truly accurate. Was that your takeaway as well there, Mr. Andrew?
Yeah, I have to say, I think this is kind of, and it's strange because 45 cents to me for the August 15 call for kind of a dumpy little oil company seemed kind of expensive to me. And this company actually has a considerable amount of realized vol, like 60%, which oil companies really don't generate, a whole lot of volatility and mostly. So, I thought this looked like a call buyer, and the buy right, I don't think it was a buy right at all. I think it felt like a stock that was kind of going to move, maybe like a synthetic straddle, something of that nature, but long call short stock of some kind. Because somebody's definitely paying up for the options, implied volatility lifted. So I'm actually interested to see, what are they actually trying to pull from this? So I think actually this is a stock with some movement ahead. So I think you're right there, Mark.
Yeah, this is pretty meaty for what is a relatively podunk little petroleum name. $12 name trading 60 vol in these out-of-the-money AUG calls. Someone is expecting something to move, and this guy came in. Looks like he bought them, so he thinks that's a fair level for the vol here. And this thing has moved a little bit. It traded up near 16 back in early April, has since sold off about 10%, trading in the mid-12, close to 13 handle now. So this guy could be thinking, hey, we're poised for a retracement, and doesn't turn his nose up at all at paying a 60 vol for these out-of-the-money calls. So let's see.
No,
Yeah.
So he's spending some dough.
Yeah, he's paying some cash. This thing's got to get moving, and it's got to get moving pretty quick for these calls to pay off. So let's see if this guy is correct. We'll file another one under the to check back in around AUG expiration time to see how this guy did. I think I have a feeling I know where this one's going to go, but you never know. Perhaps there's that much vol. It's got to be in there for a reason. You know, the market is nothing if not egalitarian in that sense. It doesn't give vol where it is not merited and vice versa, except in some randomly rare occasions. All right, and last up here on the old odd block, we're going to look at NYCB. This is New York Community Bancorp, close today at about $14 even, up about 1% on the day. This is another one, like a lot of our odd block candidates, actually compared to a lot of them, this is some substantial volume. It does about 2,000 contracts a day. We talk about a lot of names that do 50 to 100 contracts a day. So this is a mover and a shaker from an odd block perspective. They did nearly 3,000 contracts today. A lot of this, 1,000 of them coming in these near out of the money OC 15 calls, trading for 15 cents. And now we see something like this, an out of the money longer term flyer trading for a fairly decent level. This raises your hackles that something's cooking, something's up over here in NYCB, Andrew, huh?
Yeah, I think this is the thing is first the vol was so cheap in here, the stock doesn't move a lot. I thought actually it was a takeover at first, or it had been taken over. I couldn't see anything on that. So buying 15-cent calls, a pretty bullish play for a stock that doesn't move a whole lot. I mean, partly maybe now that rates might be going up somehow, maybe that somebody's seeing that banking margins are going to get better. But real cheap, I mean, it's a super cheap option at, what is it, like trading at a 15 vol, potentially tons of gamma in it. But I think this is one somebody's looking for it to move and move pretty big. So, we always get those surprises, somebody buys some calls that, oh my God, they were right. The stock is trading 16 on a takeover. So I thought it had kind of let's just kind of call it the scent of takeover on the paper.
That's the kind of paper we love.
Wafted about in the perfume of takeover essence. So we'll see what happens here in NYCB.
The more it stinks, the more we love it here on the old odd block.
Yes.
All
like
right.
A piece of camembert cheese.
Yes, exactly. Tasty, delicious, and potentially profitable all at the same time. But now it's time to take off these fancy fedoras and keep on rolling right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is the part of the show you've all been waiting for. This is the portion where I take the reins off Alex and I unleash him as we peer ever deeper into the world known as Options Express. So, Mr. Alex, what do you have for our listeners today, sir?
So Andrew teed up the gold miners, and while he was doing it, I flipped over to the Idea Hub, and I'm looking at the Idea Hub covered call screen. Now, I know Andrew talked about selling puts, and just as a quick reminder, covered calls and put sales are functionally the same trade. They're synthetics for one another, but ironically, GDX is the number 2 highest return covered right in the Idea Hub, working around the SEP 22 call. Now, remember, Hub at this point just shows buy rights. So synthetically, you would talk in that case about selling a 22 put, takes you to break even right about $20. But the other one that's up there, and a name that's been active a lot, is Newmont Mining, which has just gotten hammered in all this. And again, going out to the SEP time frame, again, if you're bottom fishing, and these are stocks you're comfortable with, look at stuff like the 27, 28. If you're more conservative, the 26 call. But as Andrew pointed out, big volatilities in these. They've come down hard. That means that trade isn't for everybody. But if you want to bottom fish in the miners, both GDX and Newmont, number 2 and number 8 on our screen. One other thing I'll talk about a little bit is, a month ago, a little more than a month ago, when we were doing the insider recording, we talked about the fact that VIX was 14.15 and volatility on gold was about the same as VIX, or even a little lower than the S&P. So again, keep in mind, just because the vol's up doesn't mean it's an idea for everyone. But if you do want to bottom fish in the GLD, if you go out to something like the August 100s, that's one standard deviation out of the money, the August 100 puts, you're capturing about a 34% implied. That's 20 vol points bigger than we were a month ago. Now, obviously, that's a reflection of the fact that we've come down hard. And, vol and price are generally inverse. Put a big asterisk up next to that and say, well, it's been a little impaired lately, especially when you look at the VIX. But if you do want to bottom fish in some of these instruments, if you do want to bottom fish in gold, if you look at stuff, if you want to sell a put spread, the August 190, that's 16 points out of the money on the 100 side, you're taking in attractive premiums. But again, I'm going to do the caveat. I'm kind of like, the old grandmother. These trades may not be for everyone. Don't do these unless you want to bottom fish.
We talked about those relatively juicy covered calls on United Airlines about a week ago, and those held up pretty well, even into the teeth of the big sell-off. If you remember, if you sold those calls, you got about covered down to about the 30 range, and that's about as far as the stock ended up falling. So even if you wrote those calls, you still fared fairly well, and now it's popped back up, trading about 31.5 today. So if you wrote those covered calls, you had a little bit of maybe anxiety there, but as long as you don't mind buying that stock and you know all of the pros and cons of going into that actually has worked out to be a fairly interesting trade. And same thing with some of these GLDs. If you know your positions and you're willing to get into that underlying, and you go into those trades knowing that, these are actually fairly attractive ways to do that. And again, going back to our friend over the New York Times about a month ago who wrote that very critical piece on options, he looks at some of these, it'd be hard for him to argue that these are not preferable ways to enter into stock positions than just working these underlying bids by themselves. But be that as it may, that is an argument for another day, just another point in the favor of options for retail customers. Thank you for that, Alex. And now we're going to close out the old Xpress Block and keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the program where we tell you what we're watching, what we're keeping on our screens for the rest of this week into the weekend. And I should mention here at the beginning of this segment that we are starting to get some earnings back on the calendar again, including an interesting name. It's already, the earnings are coming out before the open tomorrow, so by the time you hear this, it'll be interesting to see how it unfolded. But, of course, I'm talking about Blackberry, the former RIM. They have earnings tomorrow before the open, closed at about 14.5 today. And right now, the weekly 14.5 straddle went out tonight for about $1.60. So they're expecting over 10% move here in Blackberry. So expecting a little bit of movement. And of course, not surprisingly, the paper lighting it up today with about nearly 3x ADV for options trading going on out there in good old BBRY. Andrew, Uncle Mike, you guys watching Blackberry at all? I know Uncle Mike probably a little bit off your radar, but Andrew, you might be paying attention to this one just from a pure vol perspective.
We are. We had like a little the vol got super flat in there, so we have kind of a like a skewed straddle on where we sold the at the money and we bought the tails, thinking that the move there's 35% short interest in it. So either the street's thinking really bad news, or the shorts are going to get squeezed by the you-know-whats, Tesla. If they have any kind of decent news, all of a sudden they're a going concern. And the 35% short interest is not going to be very happy in the cover department, which could see, a blow up moving into next week. So actually the position is more, it's not expiring tomorrow position, it's expiring next week. So we have any potential follow through from the earnings, we might be able to catch a bit of a flyer. So basically very small, the position has very small risk. If it stays flat or goes down, it actually makes a little money. But if we fly, it actually does super well. So yeah, we're all watching and see what happens.
Someone's dog is going crazy there in the background. Loving the option block program, it sounds like. But Uncle Mike, what is catching your eye? What is causing the BBI to go up over there in the land of RCM over the rest of this week into the weekend?
Well, one thing that I'm not much of a technical guy, but one thing I'm noticing is that the SPX is back around the 50-day moving average again, and it's kind of if you look at a daily chart, it's kind of been respectful to that as a level of support or resistance, and we're just touching it today. So, like I said, I'm not much of a technical guy, but that was one thing that definitely has caught my eye. Obviously, with the metals doing what they're doing, that's going to be something of a key level of focus. I keep wanting to do some type of a credit spread on Apple, but I'm being right by not doing anything. So I want to be right by actually doing something. But right now, for once, doing something is a bad thing to do with what I want to do on it.
So you're not aggressively looking at some downside puts now that we've broken the 400 handle?
I'm aggressively looking to sell them, but all I'm going to do is look until I see the selling stop.
Wise words, sir. Let the bloodletting settle out a little bit before you dive in.
I think that is an awesome, by the way, right there is a great thing for people to realize. Don't sell puts until the stock has stopped going down. Let it have one uptick.
Isn't that chapter 3 of the Do Stuff book by Andrew Giovinazzi?
I don't know. It just, it's very hard to catch that bottom.
Wait until the stock hits 0, then sell your puts. It's pretty simple.
That's what I'm saying here. So that's why the junior gold vectors thing. I wouldn't go all in, but it's probably worth looking at. Sort of like Apple. He's looking at it, but yet it continues to tick down.
Aside from Blackberry and the junior gold, anything else catching your eye, Mr. Andrew here?
What interests me actually is how hard they mark down the volatility in the index because of the holiday next week. I think there might be something there as far as even maybe buying some juice. You might have a day for free because of the day-and-a-half holiday. So, but that's pretty much it. Like Mike's seeing if the market can actually continue these 3 days straight rally or sort of, whatever snippet of news out of whatever will probably drive us down 1.5% again. So that's that's all I'm watching there.
All right, and wrapping up the old Around the Block segment, good old Mr. Alex Jacobson, what is catching your eye? What are you watching for the rest of this week, sir? Some big moves over there in the 30-year on the mortgage side, hitting a biggest increase in 25 years. That must have caught your eye, I think, this week.
Yeah, I mean, it's still a macro market. You had the Fed in today trying to calm people again, and you had the 10-year tick down a bit. I'll tell you what's of interest, and Andrew talked about this a little bit, but next week, let's sort of go forward a week. Tomorrow, of course, the market will go up because everybody downtown will be buying for the Blackhawks parade, but it's a little late to get in on that. Next week, Thursday, is July 4th, and there is a ton of data due out on Friday. So I just want to put up a little caution flag to investors. Be aware of the fact that there's a ton of data coming out next Friday. Not so much earnings, but employment and economic data. And if you're trading weeklies for next week, given that it's going to be a short week, make sure your adjustments are done clearly by Wednesday's close. But don't come into Friday by accident. But that's kind of what we're looking at. Vol, think is going to come down a little more. Mike was talking about Apple, and I'm looking at the Julys and the Augusts, and you're one standard deviation out down down to 360. But Apple and gold are really, in terms of the liquid things, the only things demonstrating a lot of vol lately. And if you want to capture vol, those are certainly targets, but you got to be comfortable with the names. The numbers alone don't make them a good idea.
That's funny because there's been a lot of articles floating around in some of the broad financial media that Apple vol is dead and the time for writing options in Apple is over, and yet we've seen this pronounced sell-off and a little bit of a spike there, and of course the old idea hub all leaning to the contrary, that there still is some juice to be mined out there in the far off fields of Apple.
Yeah, but I think a good point to make is much of the financial press uses the term volatility different than we in the option community use the term volatility. And I think it's an important distinction. Mark, guys like you and I, when we talk about volatility, we're talking about implied. We may be talking about realized. I have to put realized in, or I get the Don Schlesinger phone call reminding me that the whole world isn't implied. I think a lot of the financial press, when they talk about volatility, are talking about what they perceive in price change, and it's kind of a different reflection. And, as we've talked about frequently, the financial press writing about something doesn't necessarily mean you know what you're talking about.
Yes, we've seen that many times, particularly when it comes to writing about options. But that indeed is a story for another day because we are running along. So that is going to do it for the Around the Block segment. And unfortunately, that's all the time we have for this episode of the Option Block. But before we go, let me check in really quickly with my cohorts here, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you, the listener. Starting off with you, Uncle Mike Tusaw, what is cooking in the land of RCM Asset Management?
Well, for this coming Thursday, for TNT, Thursday night trading, and we're going to just have real TNT because it's the 4th of July. And I actually was dumb enough to do a webinar once in my first year of doing webinars 10 years ago on July 3rd, and the record low attendance of all time. I had one person show up. I've never had such a thing happen ever, and this was from a pretty large list. So with that, we're taking next week off, but every Thursday in the month of July, the 11th, the 18th, the 25th, we will have webinars on those nights, either by myself or by a special guest. So stay tuned. Plenty to come.
So it's a very personal one-on-one webinar that you were doing. It was a very nice thing for you to do that.
I literally unmuted him and said, all right, what do you want to talk about?
That's fantastic. I like that. The one-on-one Uncle Mike webinar coming to a theater near you. All right. Thank you for that, sir. And now, next up, switching the order around a little bit, Mr. Alex, what's cooking in the land of OX going into the holiday week?
So I wish I'd heard Mike's comment about the July 3rd webinar. I put one up on July 3rd as a test. July 3rd, 11 a.m., the Idea Hub, and it might be me and one customer, but we'll make it as intimate as we can.
It'll be a personal webinar.
A couple days. Yeah, personal webinar. We used to kid about it at SIBO, that if you're a large enough institution, we'll come to your house, we'll cut the lawn, we'll do whatever we can do to get you to trade. But Monday, July 1st, both at noon and after the close, we're doing Let's Talk About the Markets webinar, 2 distinct webinars looking at the markets. And then Monday evening, July 1st at 8:30 Central, we're doing a long put webinar. July 2nd, Dan Gramza, my buddy at the CME, is going to do his monthly review of the futures markets. For those of you who may not have heard Dan is very well respected, real knowledgeable guy, does a lot of work for the CME, and he does his monthly on July 2nd. July 3rd, Idea Hub, myself, one other customer. Maybe I get my wife to dial in. July 4th holiday, then July 5th, lots of stats. So don't, just because there's a July 4th holiday out there, be aware that there's a number of economic indicators we're going to look at on that Friday.
So there you go, listeners. If you want your chance to have a personal one-on-one webinar with the Viceroy himself, jump in, take your chance now on July 3rd. They're very infrequent, those times when you can get that kind of personal mentoring with him. So take advantage of that opportunity and the fact that your rest of your fellow traders are off gallivanting and getting ready for barbecues, and you can do some hardcore options learning. Speaking of hardcore options learning, Mr. Andrew, what is cooking over in the land of optionpit.com?
Well, we have our Pro Trader Summit at the end of July. It's only for our gold, platinum, and professional members are eligible. We only have like 1 or 2 slots left. Mark had a huge webinar this week with Stephanie Link from Street.com. Went pretty well. Our gold boot camp is just ending, and I am taking next week off. So other than that, I don't know. I've unwound most of what I've got, and I'm just kind of looking forward to some time. Again, and just like Alex said, just looking at some economic data next week and see how if this little rally can hold up and this kind of movement can stick around for a while.
Didn't you just return from hither and yon and you're going off again?
Yes, I believe Mark thinks he was working me too hard and I need a week off, mostly because he's taking the week off next and has some sort of guilty pangs.
I was going to say, I need the option pit vacation schedule. I like this. This is good stuff. I'm going to have to get on board there and so I can take some of those days. All right, sir. Thank you for that. And, of course, on behalf of Andrew and Uncle Mike and Alex and myself, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and just driving these numbers off the charts. You guys really love the option block, and we love doing it for you. We, of course, love it when you guys write in as well, so you can do that at theoptionsinsider.com. Post a comment, send us an email, questions@theoptionsinsider.com. Find us on Twitter or on Facebook. We're just @options on Twitter or Facebook. Just search for Options Insider. A lot of ways to get in touch with us. Make your voices heard here on the old show. We didn't have a chance to do that this week, but we'll get to more questions next week. I know a lot of you guys have been writing in with some great comments, great questions. Don't worry, we'll get to them. And thanks again for listening, and we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.